On that note, Jim, let's get to Bob Pisani and get a market look this morning. Hey, Bob.
Hello, everybody. Happy Monday. At 2,800 on the S&P. Remember, we were at 29.39 just a short while ago, so we're 5% off of the recent highs. I watched Mr. Buffett's comments. I was surprised he didn't have any bargains out there. He wasn't doing a lot of buying at all. You can take a look at the sectors. You see his impact on the airline sectors. He got out of airlines, essentially. Jets is the big ETF there. That's down notably. Energy's weak. Banks, retail, all these had great rallies in the last the early part of last week. They're the ones declining now. Utilities was the only thing in the green at the open, and even that's in the red right now. Now the hard part starts. That's what I call it for May. It's traditionally a weak month, and no, the rules of investing have not been completely repealed, so it does matter. Remember what's driving the rally. We're only 17% off of the highs right now. The risks and things that are out there, we had massive fiscal and monetary stimulus, hopes for a treatment of a vaccine, and reopening hopes here. And those are sort of the risks that we're seeing right now. I think the risks are very clear. We talked about them on Friday, that the reopening would go a little bit slower than expected. We saw talk over the weekend of long-term closures now in California. Maybe 50% of the restaurants might not be able to stay in business, even if there is a reopening. So the risks that are out there, if you put up the next full screen, are quite real. Further downward earnings revisions, I think, are very real at this point. The market's comfortable with a 25% decline in earnings for 2020, but not 35%, not 40%. We don't know if that's going to happen or not, and that's a very real risk right now. And, of course, there's some issue about whether or not the fiscal stimulus is going to keep coming there. We've heard discussions about big cracks there over how much aid there should be to states and local governments. Finally, also China tariffs. It's tough to get your handle around stock valuations and what we should be doing in May because of the lack of guidance. So look at today. Let's just update where we are on the guidance situation. 114 companies have suspended guidance. That's 25% of the S&P 500's got no long-term guidance, and we're only 60% through earnings season. That number's going to grow. 79 have suspended their buybacks, and 31 have suspended or cut their dividends. That's mostly in the consumer discretionary and energy space. This makes it really tough to figure out the right valuations and why we're still getting 400 or 500-point moves in the Dow on a daily basis. And, of course, we still get companies withdrawing guidance. Remember, it's happening I update this list every single day. Today, Air Canada, GATX, one of the big transport companies, National Retail, that's one of the big REITs. They also withdrew the guidance. Going to be tough figuring out the valuations in May.